Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So we had a daily inside bar today. The way we were setting up this morning, just watching the hourly time frame for SPY with extended hours, had me looking bearish, and that's just because the risk to reward was not favorable, looking bullish. So we started the morning with a little bit of upside, but again, we were looking at the high of yesterday as key resistance, and I knew that if we could not break that high of yesterday in the morning, we would be looking at a lower high and an hourly equilibrium. So that's ended up with what we got, and now we're looking at the lower high. We're watching for a higher low here to form. Right now support is 275.47. 274.97 is the most important short-term support level. If that breaks, we're going to head back down towards the recent low in the 270s, and we can see that if the bulls do show up Monday morning, we'll have a really nice tight equilibrium pattern that will dictate the momentum for next week. First thing on Monday. Actually, not first thing. The break won't occur until later Monday or early Tuesday if the bulls do show up Monday morning, but this will be the pattern to be watching. So if we get the bull break, we're going to look back at the top of the bounce for resistance. If we get the bear break, we're looking down at the low of the dump. So in order to see, again, my opinion, if we're going to see lower lows, both the financial and the tech sector both have to see significant weakness early next week. Otherwise, this tightening daily range is the most likely scenario into next week and potentially even into the following week, depending on just how tight it gets and what our volume looks like. The less volume there is, the more likely we're going to stay in tightening ranges. Weekly time frame for SPY, inside bar. We'll be watching for a break of that inside bar to give us some potential signals as well, although I will watch the daily time frame myself as there are more details there and a little bit of a better picture, in my opinion. IWM on the daily chart, very similar to SPY, but you can see it's clearly more bearish, and it led to the downside in terms of being weaker. The bounce was weaker, and now here we are looking right back at the low 151.88. We dropped down to 152.74, so less than $1 away, and clearly the bulls don't have the same luxury that the SPY bulls do in terms of having space to work with, where we could break bearish from the low of today and still hold up in this pattern, whereas if IWM breaks bearish from the low of today, we're pretty much right on top of that support. Weekly time frame is an inside bar, but certainly a very weak one. Lower Bollinger Band still resistance, and if we get the break of 151.88, next level is 150.76 on IWM. QQQ, you can see it's more in line with SPY for multiple reasons. Number one, it wasn't exactly a daily inside bar. We did break bearish by 5 pennies, but it is essentially a daily inside bar, just in the sense that we didn't get a significant bear break compared to the low of yesterday. And we also have more space to work with. Again, we could pull back another couple dollars and still form a daily higher low. So the bulls do have the luxury of having more space to work with. But the bears clearly have short-term momentum, and it's just up to SPY and whether or not that hourly higher low can form compared to the low of yesterday. QQQ on the weekly, inside bar as well. So pretty much all markets and all individual names, I should say vast majority of individual names have an hourly, or I should say a weekly inside bar to be watching. Financial sector did form a higher low. The question is, can the bulls change the hourly trend on XLF back in their favor to give us that daily higher low? And right now we're watching this range on XLF, and the bulls have to show up Monday and break make that 26.88 to change this hourly trend. We have the low of the pullback, lower high, higher low, and then need to see the higher high. If we can break 26.88, we'll say that our daily higher low is established, and we'll be looking back up at resistance of 27.18, the top of this bounce. And in order for SPY to give that hourly equilibrium setup with some strength Monday, we're likely going to have to see the financial sector set this daily higher low. So again, it is similar to the tech sector here with QQQ, a lower high and a lower low today compared to yesterday, but still space to work with to form this higher low. And it's the reason that I feel like the market is going to maintain a tightening daily range, is because the XLF and XLK financial and tech sector bulls do have space to work with, where even if we start next week bearish and drop to lower lows compared to the last couple days this week, we do still have space to work with before a bear break below the low of the dump. VIX daily inside bar. So same thing with the tightening ranges. 1839 is support, and resistance is up at 2108. If we get the bull break, we look up to 2157. If we get the bear break, we look down to our low of 1706. And at this point, this bounce has not followed through enough for us to be looking for an equilibrium. If this is all that the bulls can put together and we start to head back down, this is a very weak bounce attempt, and an equilibrium will be likely if the bulls can make their way back up into the 22s to get us to the middle of this wide range from the high to the low of consolidation that we did see. So tightening ranges all around, and I will adjust my trading activity to that. If I see that the daily ranges are going to continue to tighten, I will trade less. Just like today, I traded much less. I only took a couple quick flip trades, and that's because SPY was showing me that a daily inside bar was the most likely scenario, and on daily inside bars, the shorter term time frames usually have some choppy action. So I tend to sit out tightening ranges, and I play more aggressively when tightening ranges break. I hope you have a good weekend. We'll see you next week.